YouTube, what's going on? It's your boy VIP Craig and I'm back with another video. So today we're about to do market analysis, and I'm just going to show you how I analyze my trades, how I go about analyzing trades and stuff, and just go through the day, man. Today we just chilling, we're just watching the markets. I don't think I'm going to get a trade because I already looked at the markets and there's nothing. So I might do a quick back testing session. So usually I do my back tests like every weekend, or anytime I feel like, okay, today I don't have any trade, I just go back to wherever the market ends and start from there. Okay, I'm not subscribed to TradingView Premium or TradingView Essential, but what I do is I just go back and use my entry time frame for my back testing, and I'll show you how I do it. It's so simple. For my strategy, it's so simple because I know what I need to see every time, every day, and I can actually use one time frame to get trades, and you guys will see it too. It's so simple. So let's just analyze for today, and I already analyzed, so I'll be analyzing with you guys. Then we just go into a back testing session. Maybe we might back test with the FS replay, or yeah, man. So today is a chill calm day. I just thought I'd make another vlog for you guys because I wasn't vlogging, or I wasn't posting for the past days, as you saw. So I just posted my recent video updating you about my 15k funded challenge, which I am now funded to the account. So let's just go into our day today. And yeah, man, first of all I need to make some breakfast, and then after that we start looking at the charts and analyzing for today. Let's go, let's get it. Okay, so we're going to start off in the month of March. I just went back to the month of March. The 2nd of March is where it went back to. So I'll be placing the trades as I go. I already did that. So right here I'll be just going through explaining every trade that I took. So first of all, here we don't have any trades. As you can see, we already sold off, and here we already sold off without even retesting the 50 EMA. And right here we haven't got the 500 EMA showing, so we'll start from there. So the first trade will be on the 6th of March. So here we start from this high. We have this high and this low, so that's our working range. So we retrace into this level towards the 50 SMA and the 500 EMA, and then right there, that's where we got our entry. Let me zoom in a little bit. So our entry came off us reacting from a that was essentiation, and then from the essentiation we have that favorite gap that we reacted from. Then we went below the 50 SMA, then we retest the 50 SMA to get our entry, then targeting the lows, these lows right here for a 1:4. So for my risk to reward, I use between 0, if the risk is 5 pips, I target 5 RR. Then the around of the closest to 5 pips is 5 RR, closest to 10 pips 4 RR, the closest to 15 pips 3 RR, then the closest to 20 2 RR. So as you see, as you go through the trades, you understand what I was talking about here. So this was a 1:4 trade that I could have taken. Simple trade. We are in a bearish range. We come retest the premium of the range, then we break down the Asian lows, then we retest the 50 SMA, then we take our entry to target a 1:4 using the PIP rule that I applied for myself. It works for me, so I use it. So this was the first trade that I took on the month of March. Okay, so after taking that trade, you had those highs and those lows, then you retrace to the premium of that range. Then we'll be looking for sales in this scenario. But then at this case, I didn't get any entry, and yeah, that's just about it. We came and we broke above the 50 SMA, came and retested it before my trading session, or just before pre-London. Then after that, I could have gotten an entry, but then the time for me to get an entry was already gone, and the range was already very low. So in this scenario, I didn't get any entry, and we had already reached these lows, these higher time frame lows, and it will be a C type setup. So as I was saying on my previous vlog, I think I talked about it, I need to reduce the amount of C type setups that I take. Then after that, I didn't get any trade. Also on the next day, the 10th of March, the market pushed higher and towards the 500 EMA. Then from the 500 EMA, we could have taken some buys here. I think we can put some buys here. Let me see if I did end up putting some buys here. So the market was now trending bullish. Then we obviously now have to look at the bullish side of the range. Even though we are still bearish on the higher time frame, we have to consider that we might get a bullish day, because I'm a day trader, so some trades just go for a day and then we continue with the higher time frame range. So right here we could have had a break-even trade, and just because I couldn't have reached my target would have been 1:4. Then comes the next day, didn't get any entry. Then let's just run through, no entry. Also here we have this high, we have this low, then we retrace into premium of that range to sell, but then the opportunity never came. Then comes again this setup, we have this high, this low. The low was formed during London session, so I couldn't have gotten any trade. So comes the next day, same applies. You have this high, you have this low, retrace, then you want to continue bearish, but then London session comes and we are already bearish. Then this is a setup that I like to take. These are mostly the setups that I don't hesitate about taking when you are coming from, you have a high, you have a low, you retrace to premium of that higher time frame range. This is my A setup, because I like this setup because we'll be coming from the 500 EMA and we have a higher chance of continuing the bearish trend. So right here, unfortunately, it was a losing trade. We have this high right here that we formed, then this high low will retrace to 50% of this small little 50-minute time frame range, and got my entry off of a favored gap right there, stop above the high, then hit my stop loss for a -1. Then the next day, let's go to the next day. The next day I didn't get any trade with this range high, low, then it started consolidating. With this low high, then it started consolidating and no trade right there. Then comes this day, we have this high low, we're trending down. Then once you retrace here from that 50-minute range, I got my entry, I think, using a favored gap, which was right inside there. I'll show you right now. Using this favored gap right here. Yeah. So using that favored gap, we got our entry with our stop being
right above the SMA, the 50 SMA, and those highs right there in a good range. Then it hit my stop loss. If you look at this, maybe it was a bit of a B setup, because we are kind of consolidating. But anyways, could have taken the trade, and as you saw by the stop loss size, we had a 1:3 that we needed to reach. Then comes the next day, we didn't get any trade, even though we had this low, this high, we pull back, then we expecting to push back high. Simple as that. But right here in the 15-minute time frame, we had started a bearish range, high, low, high, low, high, low, trending below, trending down. That's why in the next day, we ended up getting this beautiful trade. So we are trending down, and then we reached the London, pre-London, and we are below the 50 SMA, and we get our entry from a favorite gap with our stop 17.8 pips, so we're targeting 1:3. Simple as that. We hit our 1:3, then we go to the next day. Then the market immediately pushed high after afterwards. After a few minutes, so we might have had news on that day, so they're probably not taking the trade. So right here now we have a high, we're kind of consolidating, so they have a difficult situation to work with. But for us to take that buy, we needed to break some of the highs that were formed maybe during Asian session or the previous Tokyo session. So right here we need the market to push high and to break above these highs right here. So we needed those highs to be broken. Yeah, so simple as that. We needed those highs to be broken so that we can get our clean A setup. So it didn't get any trade there. Then the next trade would have been that buy, because we did eventually creep above those highs. We didn't actually close above those highs with the first candle that wicked above. Then the next candle was closed above, but didn't manage to close above that high. So, but still we were above the 50 EMA and above the 500 EMA, so we were good for buys. Then we had to find our entry using that favored gap right there with our stop loss 16 pips, so which means we're targeting a 1:3. But then we didn't hit our 1:3, so it's a loss. Then the market pushed down, then started to consolidate, then actually gave us an entry opportunity there by crossing below the 500 EMA, and now obviously it's a downtrend. We are below the 50 SMA, so we get our entry off of that fair value gap that came from the Asian session. Then we get our entry there as we retest the 50 EMA with a 10.8 pip stop loss, which means we're targeting a 1:4. Which eventually did get hit on the next day. So for my break-even rules, I move my stop to break-even once New York session closes above the 50 EMA, or I just move my stop to break-even after we are in the New York session and we've moved quite a significant amount. Then right here we started consolidating a little bit, then we went below the 50 EMAs, and the favorite gaps that we could have used for our entry were a bit high, didn't get any entry. Then comes the next trade. The next trade was simple, and we had those highs, those lows, high, low, we retrace a little bit. This was a B setup, not A setup, because we are around the lows, so it's kind of risky to take those entries. But even though that was going to be a good setup for a simple 1:2, then the next trade we should pick up above the 500 EMA. So the strategy is based on the 50 SMA and the 500 EMA. Simple as that. As you can see right now, we're going to use a fair value gap again, and we are above the 50 EMA, and we use our stop loss pips, stop loss sizes to calculate how much of a target we want to use. We don't have a certain exact target, but we have ranges. If the stop loss is small, we target a certain range. If the stop loss is big, we target a certain RR. By range, I mean to say RR. So right now we've ended the month of March, so we can now just go back and calculate how much we actually could have made in the month of March if we were trading properly with no errors and stuff. So we had +4 there, then a break even, +4, a break even, then we go -1, -1, +3, so +4, +3, 7, +4, 11, +2, 13, +2, 15. Is it? Let's see what I calculated. So you can use the calculator right here. 4 + 3 + 4 + 2, that's 13. Yeah, so 13 RR from wins. Then we have to see the losses. We have 1, 2, 3 losses. Yeah, so we had 3. We could have had 3 losses, making it 10 RR for the month of March. A good month. March for me was a break-even month because I was making some mistakes there and there, but we are getting better. So 10 RR for the month of March. Yeah, man, simple as that. So the strategy actually works. This is a proof of concept that the strategy actually works, and if I actually follow my rules properly and follow my strategy properly, even though I might get some losses there and there. Let's say I got 2 more losses from those winning trades. From all the trades, I would have had 8 RR. So April, we have that first trade. We're still using the same concept, nothing changes. So we're just going to run through everything pretty quickly. So we have this low right here, high, retrace, then you're expecting the market to push back up. Simple as that. So we need to just break these highs so that to continue our bullish trend. So looking at that, we have how many trades within that range. We had this buy position that we took, which might have, if we look at it more clearly, I wouldn't have taken this trade just for the simple fact that we have a fair value gap below that fair value gap. So we have this fair value gap, so I wouldn't have been tapped in, so I need to remove this. It's so simple when you're using this strategy. So since I wouldn't have taken this trade, I have to remove it, then start looking at the next thing. So the next day comes and we just don't get any setup. The market just pushes down, then pushes back up. No significant level or significant favor gap to use for our entry. Then we go to the next day. We're still looking at buying the market to that high, to that target. So this is a good trade day. We have those highs, we come back down, but then we have these highs below. Before anything, we have these lows, okay, not highs, these lows, highs, we retrace, then we need to push and break that high. Even though we still have that higher time frame high, we still have to break, but we're still going to use our stop loss rule, that if we have a stop loss which is between 5 and 10, closer to 10 we take it 1:4, closer to 5 we take it 1:5. So right here we targeted, we used this favorable gap, then we had a stop loss of 10.9 which is closer to 10, so we targeted 1:4, and simple as that, man. The market pushed and hit our take profit. So we can now see that the concept actually works when you're using the EMA and the SMA, or both EMAs. You don't actually just use the EMAs alone. You have to also use breakout structures and ranges and understand where the market is going on the higher time frame. Right now I'm not going on the higher time frame because I've been doing this for quite a while, and I can visualize, I know how the candles move. So if I'm seeing such a movement, I can just see on the higher time frame, this was the high, this was the low, this is, you know what I'm saying, yeah, this is the range you're working with on the higher time frame. So right here we just got a 1:4, again back to back 1:4s, just because the other entry had a smaller stop loss, the next one. So here we had this low, we had these lows right here, then we push high, we need to retrace down, then push back high. Simple as that. You're using the higher time frame, this will be something coming from the higher time frame. So the A setups will be coming from buying, and the other setups, like if I was to sell in this kind of market, it would have been a B setup or a C setup. So simple as that. So simple as that, the market was kind of accumulating, yeah, it started consolidating, and we used the uptrend from the 15 minutes to get this entry, using the same concepts but just tweaking it, some little stuff. So here we reacted off of a favorable gap that was on the Asian session, which is this one. So I'm using the favorable gap that is on the Asian session, and we push back up, and we have another favorable gap formed from that push, just showing us that we still have some bullish momentum stepping in. We now have some bullish momentum stepping in. Then we get our easy 1:4. Then the next trade, the next day we didn't get a trade. Then comes the next day, same working range, you still have this low high. Then we gap down below that low. But if we go back to the higher time frame, we understand that we are still looking to buy. Like if you use maybe these lows right here, highs, lows, highs, or just simple using this. We have these lows, right? This thing is annoying. We have these lows, right? Highs, low. We want to break that high. Simple as that. we're not trying to complicate things because we are above the 500 EMA. So the highest probable trades will be to buy using the 500 EMA as our support. So I've tested this, so I now understand it. So this concept is still the same. We start trending high in the 15-minute time frame, then we get our entry off of a fair value gap. Get our entry off of a fair value gap right there, retesting the 50 EMA, and the 50 EMA starts curving upwards, and it's a good trade, the 1:4. Then the next day we don't get anything, and just because we didn't retrace to the fair value gap that was right there, simple as that. Then we go to the 15th. The 15th, same thing, we are looking to buy. We have our bullish ranges with these lows, high, low, high. That's what we want to see. Even if the market is not printed all this, that's what I'll be expecting to see. That's what I'll be leaning on more. So here I could have taken a sell as a C setup, as a trend reversal setup, using that favorite gap which is right there. So anyways, I don't want to make this video so long. I'll just fast forward everything from here on because it's the same concept, and at the end you understand that I actually could have made a lot of money using this concept, using this strategy. So I'm gonna just fast forward things right here and hope you understand why I'm fast forwarding this video, because it's going to take almost an hour me explaining the same things over and over again. Okay, so now it's a little sped up, so we're just going to run through the trades and show you everything. So right here with this favorite gap, and we could have taken an entry right there because it will be a reversal entry. I would targeting 1:3, which would have ended as a break-even trade. So with the reversal entries, it's best that I target a lower RR like 1:2, so that I don't have like so high hopes of the market hitting 1:4, 1:5, 1:3. So right here with this invest favorite gap, but I'm not yet taking invest favorite gap trades, so I'm going to remove this. I haven't implied it in my system. So right here I'm just going to write no, I have invest favorite gap entries yet. So we go to the next entry. This would have been a beautiful buy trade, but then we already taken out some lows there, some significant lows there, but the buy trade was there. So the market had a high, there, a low, you have to retrace, then push back. So taking that trade over there would mean just what I was saying, you would have to target 1:2 or less. It's not a high risk trade, it's a okay trade, but then just have to target a bit lower than we usually do. So right here the favorite gap that we would have used, and instead of targeting 1:4, I could have targeted 1:3 or 1:2. So that's just about it then. Same concept, high, low, we retrace into premium, then start looking for our proper sales. Right here we would have gotten our proper sale, a proper entry sale. But then I don't think I'll take this trade because I don't like the way the favorite gap was formed with those candles just consolidating like that. So what I would have done is I would have actually, let's see this, I would have actually waited for the market to push down below that area, then retrace back to give me the entry, but then that didn't happen, so I might as well remove this entry, then come to the next one. This would have been an inverse pivot gap, but we don't use inverse pivot gaps yet. So now we have the downtrend, we have the market trending, making lower highs and lower lows. So it's high, low, lower high, then we form a lower low. So with the market doing that, then comes here, we're kind of consolidating. Okay, we have high, low, then we start consolidating, then we form a low. Then that's why this trade ended up being a losing trade, because of that small consolidation over there. But still though, I would have taken that trade either way, but a more perfect trade would have the market retracing to a bit high, then coming down. So seeing this, I wouldn't have taken this trade. That's why I actually removed it, because you don't even have a favorable gap for my entry if we check. So we have high, low, we retrace, come close to checking out that low. So this is a reversal entry. So once we creep above the 50 SMA, breaking some of the Asian highs there, and retrace to a favorable gap, I'm taking the entry right here. Initially I put a 1:3 because, like I said, if it's a reversal, I don't need to target high RR like 1:4, 1:5, 1:2, 1:3 at most. So right here 1:4 would have hit, which is okay. This thing is so annoying. Just because I'm using my phone, you have to keep sending it. I don't like that. Okay, so right here, as you can see, we're getting trades almost every day. Maybe some days we skip 2 days without trades. Sometimes you keep 3 days without trades, which is okay. So when you're going back and analyzing your trades, you should understand that you should look at such things like how many days can you go without getting any win? How many days can you go having consecutive losses? How many days? What's the most consecutive wins you've got? What's the most consecutive losses you've got? How often do you get break-even? How you should get your break-evens? How you should manage your trades? When should you start moving your stops to break-even? You look at all that. So right here, you're just using the same concept. Going through the trades, we use the favorite gap right there. Pre-transition comes, you tap the favorite gap, you get an entry, stops above a high, which is there because we had another favorite gap just above there, and this was a important zone because we had support. So it obviously became resistance. So yeah, then the next trade, that was the 1:4 trade. For those that are still wondering, for someone who's still wondering, if you're still wondering how I calculate the RRs, I use my stop loss size. So if my stop loss is small, I target a bit high. If my stop loss is big, I target small. Simple as that. So the right here stop loss was 18.4 pips. So obviously I have to target, it's closer to 20, I have to target what? 1:2. And it's a reversal trade. So simple as that. We trade above those Asian highs, and we trace into a favorite gap, take our entry, and boom. So right now we have to just calculate how much we made in the month of April. 2 plus 4 plus 6 plus 4, 10 plus 4, 14 plus 4. Okay, 14 17, 18. Now moving fast. Okay, we'll use a calculator right now. So those are the trades. Actually, in the month of April, we didn't have any losing trade. We could have had no losing trade, but just because you are human, you did get a losing trade. So that was a 20 what? Damn, with so many winning trades. Okay, I'm creeping into May. So that's April with a 28 RR month. April was a good month for me. I did have a positive month. That's why when May came, I passed my 15k, because April was an okay month. Even though I didn't get 28 RR, I was around 2-figure numbers. So let's look at May real quick. With this fair value gap, retested it, get one, quarter 1:4. We are still using the same things, the same concept. That's how you trade. It needs to be boring. Like now, it's kind of boring me repeating the same thing. It needs to be this boring so that you don't have to worry about strategy that much and just focus on your risk management and what your psychology. How you just need to identify the trades and take the trades and not worry about anything. So I enter my trades from 9 a.m. My African time, like UTC +2, because I live in Zimbabwe. So I enter my trades between 9 a.m. and 12 a.m. If any entry comes after that, I don't enter it. If the market happens to retrace to my entries after that, like in this scenario where the market did actually retrace after 12, around 1 p.m. or 2 p.m, I won't enter that because it's kind of risky. It's more risky, and I would be expecting that the market has already moved for London session. The London session volume would have stepped in already. So yeah, the same trades for May. Getting wins. Some of these trades I actually took. Right here we use a fair value gap, a reversal trade. It should have been a smaller target. Pushbacks, simple as that. We high, low, retrace, take out that low, simple as that. So this trade right here would have been an A+ trade. That's how I identify A+ trades. A+ trades are when we form a high, a low, a retrace, then we just continuing taking out that low. Same applies to a bullish market. We form a low, a high, retrace, then once you're pushing from a 500 EMA going higher using our 50 SMA for entries, we are good. This would have been a C setup because we are kind of already bearish. You didn't get that higher time frame retracement to then push. So the higher time frame retracement is this one. So these trades I actually took recently. In my previous video, I actually showed these trades and explained them. Right here, I would have used this fair value gap for my entry. Then unfortunately it did actually go and hit my stop loss. So right here we have this high, low. We just need to continue bearish, and we want to move away from the 500 EMA. So right here got our entry. This trade actually ran into profit. I explained it on my previous video. I actually took this trade even though seeing it right now, it didn't have an entry, a proper entry like the favorable gap to enter from. But I took that trade, ran into some profits, then reversed in it by stop loss. Then right here we didn't get anything because I'm not yet using invest favorable gap entries. We didn't trade this, and when I was backtesting, I also didn't see any entry. High, low, then we want to move away from the 500 DMA. Simple as that. So on this day, this would have been a reversal entry, but didn't get anything, any entry confirmation. Then on this day, we did have a entry confirmation here. I actually took this trade a bit higher just because of fear of missing out, but my proper entry should have been that low, that favorable gap low. Or actually my proper entry was proper. If I was using that small range up there, it would have been proper. Then comes the 28th. That's where I was expecting on the 28th. That's where I made my last video. I didn't take any trade, just for the same fact that I was expecting the market to form a high, low, retrace, then what, come back down. So let's just add up everything we made in the month of May. We could have made in the month of May. So the month of May was also quite okay, quite good. A few losses I see. So a 3 4 3 4 3 4 2 4 3 4. Yeah, let's just add up everything. So 3 4 2 4 3 4, that's 20. And this separate the losses. These are the profits. Okay, 1 2 yeah, and just 2 losses, so that's 18 RR. So if we just go back to everything in those 3 months, you would have had a very profitable season. Is it from March, April, May? But then I am not a robot, I make mistakes, so I have to reduce the mistakes. So 10 RR March, 28 April, 18 March. 10 plus 28 plus 18, that's 56 RR, which is around half of 100% any account.
So as you guys have seen, that is just simple the proof of concept that the strategy works. So in this month of May, as you saw, I could have made 18%, 18 RR or 18%, some may say. But just because I'm human, I make mistakes. Sometimes I try to force some trades there and there. So that's my goal with the coming months, to reduce as many mistakes as possible and just follow the strategy and use these proper concepts I was using to analyze. So that's one thing you should note too when you're analyzing. If you feel like you're trying to force a trade or you're trying to find something that's not there, go back a week or go back 2 weeks and just run through everything like I did. Just run through the trades like I did. Just you find the rhythm within your strategy, because it's a pattern, it's a thing of pattern. So you're looking for a certain pattern to end, you're looking for a certain scenario to enter. So you find the rhythm, because after doing that from March till May, you saw that you could have made 58 RR, 58%, which is crazy in 3 months. And the month of April could have been a no losing month if I was a robot. But then just because I'm human, I make some mistakes, and that's where psychology comes in. So that's why some people may say it's 30% strategy, then 70% psychology. It's maybe 10% strategy, 20% risk management, and 70% psychology. So that's something you should consider as trading. So that was my quick recap, like, of the trades I could have taken. Some of the trades I did take them, which is fine, which is good, but some of the trades I didn't take them, especially in March. I don't think most of the trades I did take. And in April was a good month for me, I won't even lie. Even though I didn't get the 28%, I got a good number of trades that I won. So yeah, which comes to the end of this video. If you're new, please subscribe, man. Just subscribe. Road to 100 subscribers, and I wish I could reach 100 subscribers in the next coming month or two. So yeah, man.
Okay, bye.